Neither Better Trades or any of its personnel are registered broker-dealers or investment advisors. I will mention that I consider certain securities or positions to be good candidates for the types of strategies we are discussing or illustrating. Because I consider the securities or positions appropriate to the discussion or for illustration purposes does not mean that I'm telling you to trade the strategies or securities. Keep in mind that we are not providing you with recommendations or personalized advice about your trading activities. The information we are providing is not tailored to any particular individual. Any mention of a particular security is not a recommendation to buy, sell, or hold that or any other security or a suggestion that it is suitable for any specific person. Keep in mind that all trading involves a risk of loss, and this will always be the situation regardless of whether we are discussing strategies that are intended to limit risk. Also, Better Trades personnel are not subject to trading restrictions. I and others at Better Trades could have a position in a security or initiate a position in a security at any time.
Hello, and welcome out to another Insights. Today we're going to talk about the little guys, and I actually have, I think, 12 or 13 candidates, which isn't terrible for the Insights. The little guys typically would have 15 to 20 at least. Normally the big guys, at least it used to, produce 20 to 30 when conditions were a little better. I mean, it's just back and forth right now. It's kind of hard to figure out what the market wants to do. It's going higher on light volume, but it is what it is. And sometimes sitting on the sidelines is the best thing to do. But so we'll take a look, go through. Some of them are already above it, their entry point, and a lot of them are looking bullish. But before we get to that, let's do a little motivational quote deal that I love to do. Make today your best day and arise to the occasion each day. And that is exactly what we have to do in the market, right? Whether you're in a trade or out of a trade, or just sitting on the sidelines watching, waiting, we still have to be ready to go. We have to rise to the occasion every single day, and we have to challenge ourselves every single day to get better. So with that, let's get on to the charts. And we got 12, exactly 12, a dozen this week. So we will look and get into them, see what there might be that's good. And this is the hard part for me when the market's extended like this, and I'd say probably 70, if not 80 of these are bullish candidates. And when the conditions are like this, then that's usually what happens is it produces lots of bullish candidates. But the problem I have is that I'm not that bullish. And I think the market could correct in a big way any day. And so how do you get into a bullish position when you're expecting a correction, possibly a big one, at any moment? So it is kind of a catch-22. And honestly, catch-22s are things that we just kind of have to get used to in the market. But to start off, we got American Eagle Outfitters, a retail apparel. And you can see, if we go look at the entire history, it is in a downtrend long-term. I mean, we're talking since 2007. It's still in a long-term downtrend. It's actually this huge kind of triangle, which is not really valid because you're talking about a multi-year triangle, unless you were looking at saying that we're going to look at years and years of bullishness. But anyway, it's gotten very bullish in the last month or so, but it's bumping its head up against that 1659 area. And a rally like this, from 13 to 16 and a half, it's most likely either going to go sideways from here or it's going to drop. The odds of it continuing to run are getting slimmer and slimmer with every rally. So looking at a possibility of this dropping down to that next level, you can see last time it dropped three hangman, and then boom, in a week and a half it dropped down to that 1475. So we're looking for that with AEO. AER, I don't know what this is. Oh, Aerospace Defense. Big, huge rally, a nice sideways move. It's almost basically kind of a pennant, and it broke out to the upside. But when you look at the volume, actually the volume is pretty good on this. The volume actually is pretty decent, but the only thing that I'm challenged with is the V-bottom, because they usually don't hold. So we'll see what happens with this. We'll see what the action looks like by the end of the day, and then we'll see how things finish off at the end of the week, and then take it from there and see what happens next week. CMA, this is one of the many that kind of broke above. I mean, similar, not really a pennant pattern because there's not much of a flagpole, but we did have kind of an inverted head and shoulders. It's broken out of that. So running to about 40, it could do. It's already broken out of the entry point, so we'd have to have it pull back first a little bit. And notice that we had a spinning top there at the 38 level the day before the last candle. And then, we were up yesterday, but on just average volume after a big doji day. So hard to say, but not terribly excited about that one. CRS ZO, Caruso Oil. Oil has been making a comeback to a certain degree. Some have and some haven't. Just like, most of them have gotten beat up with the drop, but some of them have remained stable. A lot of those that have gotten beat up that are solid companies are coming back. This is one example, kind of. You notice the volume and how light it is on the last 2 rally days. We've got some volume coming into this rally, pushing it up, but it's been super light rallying here. So a little skittish about this one because of the volume. CSX, another, this is a railroad transportation. Similar where we were at 21, 22, now we're at 26 in just a month and a half. And the odds of it continuing to run, you look at the volume getting lighter and lighter as it rallies, definitely a warning sign. So if you decide to get bullish on this, I would recommend exercising caution. Pretty much most of these are the same. Not every one, but the oil and gas has had some decent volume come in the push. Another one here, we had some pretty solid volume come on the bounce off the bottom. Nice little double bottom here. And we were starting to form a double top, but it broke out. So this could very well run from here to, up to the 757 area. So we'll have to wait and see. Fifth Third, another very similar pattern. We've got an inverted head and shoulders, nice little flagpole, kind of going sideways the last week or two. And there may be some potential up to that $18 area if the market continues to rally. But being as overbought as it is, like I've said many times, I expect a retracement, a pullback before another rally. So this is the hard part, is being patient, waiting for that. FNB, a bank. I thought this was, no, FITB is Fifth Third. FNB is a different bank. Similar picture, though. And you basically have a bullish engulfing pattern after kind of a sideways downward move. Not a lot of volume, so not terribly excited about it. And really there's, basically 50 cents of potential there. So options should be relatively cheap on this. I haven't looked, but MGM, one of the few bearish candidates. We got a bearish engulfing pattern 3 days ago, and then kind of a shooting star type of pattern yesterday, and solid volume on it. So if the market rolls over, this is one that I will want to keep an eye on because of the potential for a pullback in the market, which would probably take this and drop it off a decent amount too. Potash, nice little, built a nice little base here over the last few months. It rallied up, not a whole lot of volume, nice little sideways action, and breaking higher. So if it gets above that $19 area, if it has some decent volume, decent breakout, then there's some potential here, I think. Otherwise, I'd be a little bit skittish. Now, this hasn't rallied as much. It hasn't been as bullish as a lot of other ones have. So I'd be a little more comfortable with this one, with a little bigger position maybe. But at the same time, it's probably going to follow the market too. So if the market rolls over, this will roll over with it. So I'm kind of in a mode where it's like wait for the market to pull back or go sideways for a week and then look more seriously at positions and getting into something. It's challenging, I'm telling you. I keep saying it. WDC, Western Digital. Nice inverted head and shoulders. It is still quite a ways below the entry point, considering, it's $5 away, actually. But I love the pattern. And there's some pretty darn good potential. Above 50, you've got almost it's a 9-point measure move. Could be 10 if you went to the shadow. So there's a good 15 to 20% potential move if it breaks to the upside here. But it probably will be mid next week, late next week before that happens. And last but definitely not least, a very similar picture. Another inverted head and shoulders. Pretty textbook. We got about $4. You could go $4.5, $5 of potential if you went to the shadow. I usually do this a little more conservative, but interestingly enough, it's already broken out of the neckline, pulled back, tapped it, and rallied from there. So we're sitting here going sideways. We've got a resistance level right there at 50. This one I really like, because if it does break up and above here, and it stays above 50, then the odds are pretty good that it's going to rally and probably go up to about 52. So we get about $2, a little more than $2 of potential on $50 stock. What's that, 5% or so? 4 or 5% of potential. Maybe not monstrous, but it's decent enough to where we can make a healthy profit. So I like this one. I'm just concerned about the market and the extension that it's on, and pretty likelihood that it will pull back from where it's at. So just going to be cautious. So there we have it for the little guys this week, or for next week and next week. So we will see you very soon. Y'all have a great weekend. We'll talk to you soon. Bye-bye.